Good morning, everyone. Welcome to our Wednesday morning trading room. My name is Eric Senft. I'm going to be your host here this morning. If you have any questions or comments, please feel free to ask away. We got a little chat window there. I'll do my best to get to everybody's questions. Hopefully the market will be a little bit more responsive than what it has been. Although it did kind of trickle higher yesterday, didn't it? It was a little bit quiet during the trading room yesterday. All right, what you're looking at here is the diversified trading system, and I'm going to give you a really quick overview. It's diversified because we're looking at the market from 3 different points of view. Here at the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader, and the bottom right is the Raptor. Now, the Raptor is kind of a combination or a hybrid, if you will, of the other 3 trading birds. Regardless of the signal or the tool, the signals all develop the same way. First, we get a warning dot telling us that a signal is developing. Then when the signal is complete, we get a triangle and a hash mark. Now, I'm actually going to anticipate we're going to get a triangle hash mark here on the low of this bar. This is on the Hawk. You're also going to notice we don't necessarily trade every single signal. Rather, we try to hold out for the higher probability setups, of which this is one. This is what we call our first micro-macro cross signal on the Hawk Scalper. It occurs when the thin line, that's the micro line, crosses the thick line, that's the macro. And see, now we have the triangle hash mark telling us the trade is complete. Everything is in. We've got a red trend lines, red bars, red signal, red filter. So everything is in sync. If we do engage this order, what I'll do is I'm going to delete my profit target so that I can try to show you how the trailing stops work. All right, are you going to bring me in? There we go. All right, so I'm going to delete my break even and my profit target here. Now, this tool that you're seeing me use here on the right, this is called the Trade Manager. The Trade Manager is a very unique piece of software. It's perhaps the most powerful piece of trading software available to the retail trader, and I'm not just saying that. This truly allows you to trade like the traders on Wall Street. There's 2 components to the Trade Manager. First, you have your risk component down here. This caps your risk at a certain percentage. So right now, I have my risk set at 2%. So that means no matter where I place my stop, I will only risk 2% of my capital. So whether I place my stop here, notice the risk amount, $390, almost $400. Whether I place my stop here, okay, a little bit of a rounding error going on, but still around 300 bucks. The risk does not change. That's very important. What does change is your exposure. You see, when you have your stops tight, or not your exposure, but your quantity. So when your stops are tighter, you're trading more position, more contracts. When your stops are a little looser, you're trading fewer contracts. So you'd never end up losing more money than you can afford. A very, very important concept. Second part of the Trade Manager is this part right here. This is called, well, the Profit Finder. We used to call it the Profit Finder. And it's an assortment of 16 different stop strategies, and this is what they look like. They're these blue dots that are on your chart. And when I make this active, I'm just going to try to let the market get down here a little bit. I can engage these stops and well, shoot, I'll do it now. The Trade Manager, so I've just enabled it. If I click accept, watch what happens with my stop. See, the Trade Manager picks up my stop, and now I can quite literally leave this trade alone. And I can go look for other opportunities, walk the dog, go have a bite to eat, whatever. The Trade Manager will automatically manage my trade for me. Trying to get that stop back to where it was. So I'm just going to disable this for the moment. I'm going to roll my stop back up here above the high where it was. Good. See if we can't ride out this little bit of a swing and get the market to move a little bit lower for us here this morning. All right, so that's just a really quick overview of what these tools are, and feel free to ask any questions if you'd like me to highlight a market for you. Oh, Tony's having trouble with the audio. Can I get an audio check? And is anybody else having difficulty hearing me? Okay. All right. All right, thanks very much. So the charts I'm focusing on here are the NASDAQ. I'm also following crude oil and soybeans. Like I said, don't be shy about asking for a market. And I'll try to hold out for some decent trades too, because I know sometimes you guys like to mirror my trades. Not that, you know, I know anything you don't know. I have the same tools. Okay, we're only a few minutes into the session. And they're struggling for direction. Let's take a look here at the NASDAQ now on the Falcon. The Falcon is our swing trading tool. And with the Falcon, we're going to pay a whole lot of attention to this trend line. When this trend line's red, we're going to look for sell signals. When the trend line turns green, we're looking for buy signals. One of our best signals on the Falcon is when this trend change develops. It's essentially the first signal again where everything is in sync. We call this our trend change signal. It has a characteristic little up, down, up pattern on the buy side. And you can see very nice follow through to that one. So the NASDAQ, when it did get in gear yesterday, kept rallying higher. These horizontal lines that you see here across the chart, this is one of these standalone system add-ons that are available. And this is called the Ultimate Support and Resistance Suite. It's an assortment of 21 support and resistance lines forecast for today's trading. No, they are not floor pivots. No, they are not Fibonacci retracements. If they happen to coincide, it's really just a coincidence. We've got, like I say, 21 lines. The three main lines are these guys right here. We've got the gold line, which is the median line. We have the blue line above, which is primary resistance, and we have the blue line below, which is primary support. These three tend to set the tone for the day. If the market gets above here, it tends to be a little bit more bullish. If it gets below here, it tends to be a little bit more bearish. Right now, you can see we're kind of sandwiched between the primary resistance and the median line. So nothing really going on just yet as far as the NASDAQ is concerned. Here in the bottom left is the Eagle Trend Trader. Now the Eagle has this band on it. No, it's not an Ichimoku cloud. Yes, I know it looks like one. It's just our band that gives us the directional bias for this particular market. Here too, most of the trades we're looking for are trades where there's confluence, namely green bars, green signal, bullish band, green filter. But the Eagle, some of our highest probability opportunities develop when the market trades into the hard edge. That's this side of the band. We always anticipate a reaction when the market hits that hard edge. And very often we're going to get this signal right here. This is what we call a red bar buy. Red bars, but they're producing a buy signal. So the market's starting to turn bearish, and it's almost as though all of a sudden the bulls wake up and they say, uh-oh, we got to do something about this. And they come back and produce a buy signal. Very, very high probability. Always occurs near the hard edge. And you can see that there was some pretty decent follow through from that. This tool up here on the top left of my screen, this is another one of these system add-ons, which means it will work on any chart, not just a DTS chart. This is the Trade Forecaster, and right now Trade Forecaster says we're in trend mode for 105 minutes, at least an hour and a half, so we'll see what comes of that. After which we're supposed to move into swing mode. So we'll see whether we get any follow through to that. All right, take a quick look here at the Raptor now. Before we get back to the trade, it looks like they're going to try to run up to my stops. Very often we try to avoid a really early signal unless the setup is really nice. Well, actually that first micro-macro cross wasn't that bad. We'll get back to that one in a second. This is the Raptor. The Raptor, as I said, is a little bit of a hybrid. It incorporates elements of the Hawk, the Falcon, and the Eagle all into one trading tool. So you can see we've got the Eagle band in here. We have a double band or a double cloud. The bar colors, the signal generation, the filters, they all borrow from the various tools. And here too, we're going to be looking for high probability signals to take. This is one. This is called a cloud crossover signal because the clouds cross over, and what happens whenever the clouds cross over, the market tries to retreat into the cloud, and we expect the cloud to push the market back out and then produce a signal. We had a cloud crossover here to the short side, but you see the market pushed out but never was getting bearish enough to produce a signal. Here it reversed, produced a signal, and we ended up with a fairly decent little move up. And now we are kind of making a little bit of a double top, maybe a sideways range. Not really sure what to expect out of today's session yet. This nifty little gadget you see right here, this is called the Geiger counter. This is another one of these standalone type add-on things. Geiger counter is essentially a tape reader. It gives you a visual of the time in sales. So you can see there was a big buying block going on through here. Sellers weren't able to absorb it, so I'm guessing it was led to this little push. It's rather subdued for that much buying, but here come the sellers. The sellers put in a block to the short side, or a spike or island, however you want to see it. So that's one component of the Geiger counter. The other component is this dial right here. And the dial is very helpful when you're in a position and when you're considering a position. And most times the dial flip-flops back and forth, right? Because that's what happens. There's a little buying, there's a little selling. What's interesting is when the dial pulls hard over to one side and stays there for about 3 or 4 or maybe 5 seconds. What that shows you is intense buying or intense selling. So on our Hawk trade, we're currently short from that first micro-macro cross signal, which I guess we took somewhere around here near the open. And when you're short, and if you see the dial pull hard over to the buy side and just stay there, which I'm sure it was doing before this little rally, you may consider about maybe bringing your stops in a little bit tighter. Or if you're, let's say you took this cloud crossover signal here, and the market's, progressing very nicely, you have your stop strategy in play, and let's set this up. There we go. We'll dial it back a little bit. Okay, so you bought down here off of this cloud crossover signal, and you're in this trade and you're getting up here and you're wondering, gee, I wonder if I should maybe take profit or get my stops in a little bit tighter. Well, if you see the dial pull hard over, see here to the sell side and stay there, not just touch it, but oh, see how it's sticking and sticking and sticking? All right, let's see what happens now. Oh, they're sticking to the buy side as well. We really want to see one side take control. Oh, the buyers are coming back a little bit stronger. What we'll see is we will see if the sellers can get it back here and stay to the short side, we will see a little bit of a short-term move lower here. So if you've already got a lot of open profit here, as you would, you may consider, well, maybe I'll go with this tighter stop strategy. Maybe I'll change to parabolics now and, take the stop out. So very useful tool. And as I mentioned, it will work on any chart style. Okay, so now we're just kind of waiting for our next signal. Sellers showed up finally off the highs. They're going to try to press the market back down here below the low or to the lows. If they fail, well, we're going to get tagged. If we get one more little itty-bitty swing in here, let's say the market goes up like this and then starts coming down, that's going to be my cue to start rolling my stops, because that tells me the sellers are going to make a real effort to push the market lower. And then I can start to roll my stops. And if there's another reversal and I get tagged, well, at least I haven't lost more than I can afford. Remember, I've got my risk capped. The beauty of the tool like the Trade Manager is that it really does allow you to run a reasonable stop. You're no longer are you strangling your trades. Let's see if I can find you a decent example. Okay, well, we're going to have a little bit of overlap here. Here's a macro pullback signal. This is one of our high probability signals. If you did things the conventional way, you would probably place your entry here and your stop loss here. And then you would say, oh dear, I need to get at least twice my risk as a profit target. Okay, so your profit target's up there. And what happens is, oh, okay, the market brings you in. Let's make my entry just a little bit tighter. There we go. Market brings you in and then stops you out. And then what happens? The market goes up without you. In order to avoid that, you need to run a reasonable stop. Well, how do you do that? Well, by keeping the risk amount the same. So whether you place your stop here, or here, or here, or even down here, your risk amount stays the same. I know, you don't believe me. Let me show you. So we're going to place a stop here. The risk amount is 420. Now don't freak out if that's a lot of money. That's 2% of my capital. What if I place my stop here? Oh, okay, a little bit of a rounding thing going on, but around $330. Notice what happened though. We went from 7 contracts to 2 contracts. What if I place my stop way down here? Oops. trade manager says, sorry, Eric, can't do it. That's too much money. All right, I could place a stop way down here. Now let me ask you this. Which trade has the highest probability of success? Well, the one with the bigger stop, right? The one with the big stop is going to give you the most staying power. Now, I'm not saying you need to run a stop way down here, but I am saying you may as well run a reasonable stop to give your trade a chance. Like, look at this trade. Had I run a stop tight here, we would have been stopped out. I put my stop above a fundamental point, above a swing high. I'm working on the probability of the trade. I know this is a high probability signal and that the market should head lower from here. But we had to take a little bit of heat. And now we're getting a little bit of buying going on again. I could bring my stop in. I could possibly bring it in above here. I'm looking for one more swing. Now notice too, I'm not panicking on the trade. Why? Because I know I've only risked 2% of my account. I'm comfortable with that amount. Would whatever my loss is here, 300 and change, $370. Would a $370 loss be unpleasant? Yes. I'm not in the habit of losing money, right? I'm trying to make money. But it's not a stop loss until it gets hit. So if I can keep it out of the way, then it's not a loss. Okay, I'm getting a little bit of buying reaction now to the lows, which is anticipated. And we'll see if we don't get some follow through. It's not a first micro-macro cross yet, even though the trend lines have crossed. Our macro line is still out of sync. I know we're producing a signal here, but notice this one, everything was in sync. This one's not in sync yet. That's an important difference. Oh, is Cindy in the room today? Ah, Cindy, you're here. Great. Cindy, I don't know if you got our emails. I'm hoping you did. If not, check your spam folder. For those of you who use Yahoo email, for whatever reason, Yahoo email doesn't like us, and it will send your emails or our emails into your spam folder. So Ben and Adam have written you back from your first email, but obviously you haven't received it. So those of you with Yahoo email, if you write us, we're not being rude. We're usually pretty good about getting back to people on their emails pretty quick, especially Ben, the support fellow, as I mentioned. I don't know when that guy sleeps, or he must be tied to his computer when he gets an email. It must wake him, because I've emailed him at all hours and he keeps writing me back within a few minutes. All right, very important set of bars developing here. We're getting a real tug of war going on at the lows. We'll see if we get some follow through on the hawk now. I'd love to show you I suppose I could have showed you the trade manager already, how it would have rolled the stops down from here. All right, so I'll enable the swing high strategy, which is going to roll the stops according to the swing highs by my parameters that I've set here. You can also preview different stop strategies. So if you're thinking, gee, I wonder what the ATR would look like. So you can throw the preview on, and these orange hash marks tell you where your stop would be if you were running the ATR strategy. We must be waiting on an announcement. Borges is asking, can the trade manager be bought independent? Yes, sir. The trade manager, and then there's the Trailblazer. Now, not to confuse you, but the primary difference between the two is the Trailblazer does not have the risk component. The Trailblazer does have all the stop strategies, but it was developed for a different reason. Some of our owners were trading some very fast-moving markets, and they said, can you give me a one-click entry system? So that's the Trailblazer. And what you do is you preset your quantity and your targets up here. So target one has, or first contract has got a target of 10 ticks. Let's make that 20 ticks. And let's say I'm going to run another contract with an open target. And if I enable a stop, sure, here, let's use the swing strategy. So watch what happens when I hit the sell market button. We don't have a signal. Pardon me, we don't have a signal here, but let me just show you how this works. So I hit sell market. I automatically have my stop. I'm running an auto break even. You can turn this feature on and off if you like. And I also have my profit target, all automated. So I've got two contracts. I'm going to take profit on one in 20 ticks. Now, once these orders are live, you can move them around as well. So let's say you want to change your profit objective, or you want to bring it in closer, or whatever. All right, so that's a one-click system. Helpful if you're trading, like I say, some fast-moving markets. All right, well, we're stuck here on the median line now with our support and resistance lines. This is an add-on as well. You can put this on any chart. I tend to put one tool per chart just to avoid the clutter. There's no other reason for it, really. Yes, there is news out today at 10. Thank you. All right, well, we'll just have to wait it out. Our hawk moving back into yellow bars. Yellow bars very, very neutral. When you see a bunch of yellow bars starting to print at more or less the same latitude, like right about this point here, I'd be thinking, oh, sideways range. Unless the market converts the first micro macro cross higher, sideways range, and that's where we're at. So uncommitted at the moment. So the report should be out by now, but it didn't seem to do a whole lot for the marketplace. Here's crude oil now on the Eagle as we're waiting for something to happen, and you can see crude oil also very, very sideways. This is our trend trader, the band, very, well, starting to twist up quite a bit like a rope. What we want when we're trend trading is a band like this. See, nice little move into the hard edge. We come out with a sell signal, move into the hard edge, a green bar sell. Took a little heat on it, went a little bit sideways, but still had some very nice follow through. Compare that with this, where we're just kind of wedging up a bit. Soybeans got busy early today. Here's soybeans on the Eagle. Actually, toward yesterday's close, we got a red bar buy signal, and they never looked back. All through the overnight, into this morning's open, just continuing to plot higher. That's the thing about soybeans. Once they settle on a direction, there's usually a little bit of follow through, unlike the NASDAQ at the moment. Yeah, like Gary says, it's like the military, hurry up and wait. Borsch is asking, how do they work with the Forex market? Well, let me show you while we're looking for something here. I'll throw the euro on, the euro-US pair. Now, with my data feed, I've got to go to the futures version, the 6E, which will be identical to the euro-US dollar contract. Just waiting for that to load. All right, so here now is the euro on the hawk. And, well, a little bit choppy today. Yesterday, a very active day in the 6E when we took a look at it. But here's one of our high probability signals. There's that first micro-macro cross lower. Here's the first micro-macro cross higher. Get a little sideways stuff, and we're trying to get that one to go a little higher. We also had a green bar sell signal here, which seemed to be the big move yesterday or through the overnight. Yeah, lots going on actually. Here's a green bar sell that you could have bought the failure on. That's more like it. Oh, it's odd that this came during the North American session. Usually these are the kinds of moves you see during the European session. Nice first micro-macro cross signal right here, and the market never looked back. You really only need one of those per day. So a little bit choppy, but some decent signals there. Here was a macro pullback signal on the hawk in the euro. Okay, let's take a look at the Falcon real quick. So the Falcon today, same problem as what we're seeing on the NASDAQ, except we're pinched between the primary support and the median line. Working a possible trend change signal. Notice the trend line has changed color. Here's that little up, down, up pattern. We are producing a buy signal. Good setup to buy. Maybe just above the high of that bar. Can I risk it down here below primary support? Oh, I can. So there's a little possible buying opportunity on the euro. So the euro trying to squeak a little higher. Here's that same move that we just saw on the hawk. Also got a trend change signal down here. Came back a couple of trend line touches, so you did have a couple more chances to get into that trade. Euro a little bit sluggish. Oh, there they go. Come on, give me another bar. Right, so I'll enable my stop strategy now. Order canceled. Hooray for us. You're going to notice that a lot of times after the market hits your high probability profit target, you're going to get a little bit of a reaction. And that's what we're seeing here with the euro. Okay, trade manager automatically rolled my stops down. And now we're seeing whether the sellers can get their act together. I'm going to press the low one more time. Maybe get some follow through. You scoundrels. All right, here's the euro last but not least on the eagle. And you can see today very, very obvious sideways trading range. It's looking something like this. Yesterday, a lot more cooperative. Well, we got a rule of three signal here, but actually better opportunities on the hawk and the falcon. We should have seen a trend change signal here. For whatever reason, it didn't produce one. Not all the parameters were right. Here's the euro from last Friday. A couple of very nice green bar sell coming off of the hard edge. Great follow through there. Nice little trend change signal. So to answer your question, the DTS system will actually work on any chart that you can plot on Ninja. It doesn't matter whether it's Forex, futures. We even have traders trading the stock market with the DTS tools. We've got ourselves a very sideways market now. Again, all these yellow bars printing more or less the same latitude. We sure have been nursing this trade for a while, but I'll take the stop out here if it tries to reverse again. I could leave my stop above the high and just continue to let it thrash about. But I think if we see a failure here, we could get a little bit of follow through to the short side. All right, let's put that back on the shelf. Yeah, like Tony says, kind of a tight trading day today. Certainly is. You could, here I won't be able to show you the OCO function today because, well, not on crude oil anyways, because there's no crude inventory report today. Because of the Labor Day holiday, crude inventory got moved to tomorrow, to Thursday. We have this OCO function with Trade Manager. OCO stands for one cancels other. And what you can do is you can place your buy and sell orders directly on your chart. And when one side fills, it will cancel the other. So for instance, if I cancel this order, the other order cancels. You can put as many OCO orders as you want on your chart, although I'm not sure why you would want too many. All right, so it looks like we've got that range bracketed. I'll enable my stop. And now we'll just see which way the market wants to break. Or not. I think we did get a double pullback signal here on the Raptor. Yeah, 1, 2, there's a double pullback. We also got a soft edge sell signal here on the Raptor, but just given the sideways nature of the market, sometimes you've got to do more than concentrate on the last 3 or 4 bars. You've got to actually look at the whole chart and look at the context. Okay, let's see here. Tony's asking, Eric, if I place my stop on the NASDAQ hawk a few ticks above the high, if the market does break out, retreat and continue higher, I'd be stopped out. But if it breaks out and never comes back higher, I'm still in the trade for just a few dollars more. Does that make sense to you? Yes, absolutely, Tony. So we got tagged here on this reversal. So I think what Tony is asking is, what if I put my stop above the high, but rather than just put it above the high, let's keep it a little bit further away. Yeah, definitely. Absolutely, because it's very likely the market will come up here, it will break, and, well, given the sideways nature of the market, I'm not sure how big of a break it will be. You know, we may not get a big breakout and reversal, but there was always going to be some sort of reaction to the breakout. What's the statistic? 75% of all breakouts fail? So we've got an obvious range here. There's a 75% chance that when the market tries to break out, it will fail and reverse on itself. They tried to do it down here, right? They broke the low. They only broke it by a couple of ticks and then reversed and headed higher. No, it's a good strategy, Tony. I always try to keep my stops as far away as possible. In fact, from this first micro macro cross, if I had left my stop there, I would still be in this trade. It's not a loss until it gets hit. If you can keep it far enough away, providing you can afford it, if you can keep it far enough away, do that. It's kind of like a, yeah, great, Tony says, I'm still in. It's like a game of tag. Remember tag when you were a kid? The objective is to keep away from the guy who's trying to tag you. And trading is similar. Now, the market does have a bullish slant to it. There's no question about that. Right? Speaking of context, if you look at the overall bias of the chart, there's no question that it's bullish. But it's also been kind of sideways here. So we know there's some selling activity going on here. Tony says this has to be the world's longest scalp. Yeah, I know. It's taken a while, isn't it, for a scalp trade? Well, I'm going to pop into a trade here soon just so I can show you how the automated stops work, because I've got nothing going on. Not crude oil, not soybeans, not the NASDAQ. Nothing's moving. Yeah, nothing. I'm scanning the charts here. Oh, well, we're getting a macro pullback signal here in soybeans. Oop, just tripped. I'll try to run it a little bit deeper, maybe to shoot. Forgot. Okay. There's a soybean trade. So the macro pullback occurs when the micro line, that's this thin one, goes out of sync, but everything else stays in sync. So it's pretty easy to identify. We generate a signal, and we would anticipate, at least on the Hawk scalper here, a short-term rally. Yeah, right now we don't have much going on. Good question, Jim. Jim's asking, Eric, is there a way to change the size of the Trailblazer to make it a bit smaller, fonts and buttons? No, but you know what? Adam was just asking me if there were any requests for the Trade Manager and Trailblazer. So I'll make sure to pass that one on. In fact, I'll do it right now before I forget. Yeah, I don't know how big they'll be able to make it, Jim, but I'll definitely forward your request. And it makes a difference too when these requests come from you guys. So don't be don't be shy about sharing your input if there's something you'd like to see. Uh-oh, they're going to make a poke through the highs here. Okay, there they go. A little bit of a push through the upside. Let's see what happens here now on the OCO order as we broke through the primary resistance. Let's see if we get a reaction or some follow through.
Order canceled.
Tony says, I got tagged on the NASDAQ. I have a feeling now that they've kind of broken out the top end of the range here, we may see them try to trickle a little bit higher. Yeah, Stephen, I feel for you. Stephen says, I went long on the YM as it looked better, and I just got back to break even after 10 minutes of torture. I know, the markets are very slow. And, of course, there's nothing we can do about it. We just got to stay with it. Oh boy, are they going to tag it? Come on, get going. Oh, almost. Jim says the advanced decline numbers are bullish. We've got 1,600 on the buy, 1,100 on the sell. That's mildly bullish, a positive 500, but bullish all the same. Tony said gold is tracking lower. Maybe we should take a look at the gold market because there's not much going on here. All right. So we actually got filled on this breakout on the OCO order. Notice how the other order disappeared, how we automatically have a stop and play. I am running my auto break even, so we have that. But when you're using the OCO function, you don't have a profit target. You can set a profit target manually. Let's say you wanted to take profit up here. You could enter a profit target that way. Oops, got to turn my OCO feature off. There we go. Let's try that. So, are we going to see it trickle up here? Let's roll our stop back a little bit, give ourselves a little bit more room. Okay. Boy, it's brutal today. All right, well, what we need to do is we need to run a relatively conservative stop. So we'll go with the chandelier. The chandelier and the swing high-low are perhaps our two most conservative stop strategies. Oh well, guess we just gotta bide our time. All right, well, we'll put that on the shelf. I wish there was more going on for you guys here today, but oh, thank goodness, a question. Darcy's asking, how do you set up the break-even feature? Let me show you. We do the auto break-even here from the trade manager. Now, the trade manager is not an indicator, it's a strategy. So when you turn your trade manager on, you'll go here to the very top and you'll have your auto break-even parameters. So you'll have your enable feature. I don't know why it says enable disable, but your enable feature. So there's your on-off switch. And then you can set your break-even trigger in ticks. Now, I usually set it about anywhere from 3/4, from 75 to 80% of the way to the profit objective. I figure if the market gets that high, then it owes me at least a break-even trade. And then I can also set my break-even offset, which means how many ticks above, below break-even do I want to go. In this case, it's 1 tick, so it's going to be break-even plus 1 tick. when you have everything to your liking, you go down here to your enabled function and you make sure it's turned on and you apply your settings, and now you will have an auto break even. Oh, Tony, heartbreaker. Tony says if I was just 2 ticks higher, I'd still be in the trade. I know, it's tough. Let me see here if we get any guidance from. I'm going to pull up a daily chart. 1 second. Let me show you a little trick. Well, it's not really a trick, but we'll call it a trick. Okay, I just pulled up a daily chart for the sake of convenience. So what are the highs here? 48.36 3/4. We'll say 48.37, 48.35. Oh, we're already over, so it wouldn't have mattered. Let me demonstrate though, because there's nothing going on. You know, people are always curious about placing stops. Where should I place my stops? Well, a very simple way to place your stops is just to trail them a few bars back. Now, I know we're using a daily chart here. The same principle happens whether you're using a 5-minute chart, a daily chart, a DTS chart with mean Renkos on it. It doesn't matter. Or actually, I guess I could show you one here. Sometimes the easiest way to place a stop is 2 swings back. So this is actually swing 1, there's swing 2. So let me adjust this. That seems to give the maximum staying power. We'll give ourselves a little bit. There we go. So there we are. We're 2 swings back. If the market reverses 2 swings, well, then you can be pretty sure you're on the wrong side of the trade. Unfortunately, for the short position that Tony was talking about, I was looking for another swing higher that he could have placed his stop above, but was not to be. Now, sometimes going 2 swings back is kind of scary. But again, that's why we try to contain our risk with our trade manager. So let's say, well, here's a macro pullback signal. So let's say I'm going to take the macro pullback signal. There's swing 1, there's swing 2. If I'm comfortable with this amount, I can take the trade. If I'm not, well, I can dial down the risk amount. Let's change it to 1%. So there's swing 1, there's swing 2. That's where I'm going to put my stop. There's my trade. Right?
Order pending.
If it works out, great. If it doesn't work out, well, I haven't lost more than I can afford. I'm only risking 1% of my trading capital. You're not going to run into problems risking 1% of your capital. You will run into problems when you end up risking 7%, 10%, or more. You think that's not possible? I've shared this story before, but on 2 separate occasions I've met people, one blew up a $20,000 account and another blew up a $25,000 account in a single day. In a single day. Hi, honey, I'm home. I could just imagine that conversation. Well, really, I can't, but I wouldn't want to be having that conversation. You blow up a $25,000 account in a single day? Shoot, go to Vegas. At least you'll have some fun doing it, and they'll treat you like royalty. I shouldn't laugh, because obviously it was not a proud moment for the people sharing that with me. Yeah, like Steven says, oh, it's easy to do just 3 E-mini trades with 10 contracts. Yeah, the whole point is they were obviously risking a whole lot more than they could afford. They were probably averaging in as well, so the market would move against them. You know, let's say they were short. You know, they look at the market, they think, oh, it's short, so let's sell, and they sell down here somewhere. And then the market goes higher, and they say, oh, well, my guru said sell some more, so they sell some more. And the market goes higher still, and oh, well, we better sell some more. And the market goes higher still. And you can see where this is going, and they sell some more. And before you know it, oh, they think, oh, it's finally turned around, and then it goes higher still. So, yeah, a combination, actually, both of them, if I remember right, were not running stops. They were averaging in, which is never a good idea. If you're on the wrong side of the trade, you're on the wrong side of the trade. It's going to happen. That's trading. You're not going to be right all the time. When the market is choppy like it is today, here's your best course of action. Yeah, here, we'll do it on here. When the market is obviously sideways, you open up your chart, you try a trade, it didn't work out, you get a lot of sideways trading going on, a lot of yellow bars printing, you're thinking, uh-oh, sideways trading range. What do I do? Here is what you do with a sideways trading range. You identify the trading range. Okay, so there's our trading range. Funny thing about trading ranges, you get a whole lot of buying going on here, like about the bottom third, bottom quarter. You get a whole lot of selling going on in the top third or quarter. You get nothing going on in the middle. So there's a couple of ways you can handle this now. You can try to trade the range. In other words, you're going to try to buy in the bottom here. You can throw in a limit order and try your luck. Hope the market comes back. Now, if you do this, you should only do it on a scalp. So let me demonstrate this for you. Let's say we're going to try to buy here on the low, and we're going to run a, oh, here, I'll show you the fixed tick strategy. Here we go. We'll run a 20 tick stop off of the last low. Okay, now notice how it's displaying on the wrong, gotta accept it. Notice how it's displaying on the wrong side. I want it below the market, so I need to put a little minus sign in front here. Sometimes you need to adjust it. Okay, so there's my stop. I don't need to run it that deep. We'll go 20 ticks. I'm going to go in with a limit order. Say down here, my stop loss is going to be there, and I'm just going to scalp. I'm only looking for a scalp target. If you're doing this kind of stuff, you just want to be in and out. You don't want to press your luck. Because I'm going to show you the other way that you can trade a sideways market like this is to not trade it until the market gives you the breakout. Gives you the breakout and then the retest. After that, you're going to be looking for your confirmation that the market is going to stay outside of the trading range. So we've had the breakout, now we're going to see the retest. Might be enough in here that we can get a scalp out of it. If the sellers do not confirm the breakout, well then the market's just going to re-enter the trading range. And it will go up here and try to retest the highs eventually. So the safest way to trade a sideways market is to avoid it until it breaks out and proves to you that it can stay out. So we've had the breakout. The market, should it retrace here, we're going to get a first micro-macro cross lower, and then we'll have a proper sell signal. If it's going to remain range bound, well then we're going to move back inside the trading range. I think we're going to see a little bit of a move lower here though. So not a very cooperative day, not the best day to be demonstrating stuff because there's just not many opportunities to be had today. In fact, I'm not sure we had any good opportunities. Look at how congested though the market has become. This tool up here on the top left, this is the Day Ranger. This is another one of those system add-ons. And it gives you a summary of the ranges. So our 30-day average about 120, 10-day average around just shy of 130, 5-day average again around 120. Yesterday 150, 151. That was an exceptional day. Today we're only 54. So the market very, very subdued today. But we have seen a bearish break, so we may see it try to trade a little bit lower from here. Yeah, Gary says, I've blown up my share of accounts, but not in a single day. You know, if you manage it right, you can hang in the game for a long time, and that's the whole point of it. Let me see if I can't show you this particular tool. Many of you will have seen this. All right. There's nothing going on, so this will be a good way to finish the session. This tool here is called the Money Expert. You go to indicatorwarehouse.com/money expert and play with it yourself. It's all about position sizing. It tries to drive home the importance of position sizing. So here we have Joe. He's trying to be safe. He's only trading single contracts. He starts with a $10,000 account. 100 trades later, he's got his ups, his downs. He's made just shy of $14,500. But is that the best he could have done? Well, if he had position sizing in play, he could have theoretically made as much as about $35,000, $37,000 with that same $4,500 gain. How is that possible? Well, it's all about position sizing. Fact of the matter is, if you contain your risk, you can be profitable even with a 50-50 system. In fact, one of my most profitable months ever, I think I was running like 45% on my trades. That I was right. I was right less than half the time, and yet it was one of my most profitable months ever because I contained my risk. So you click the button and you see how it will work out. This is actually a very realistic curve. So Joe's the blue line, you're the green line. Joe starts with 10,000, or you both start with 10,000. 100 trades later, Joe actually did a little bit better, but not much. Up to about 16,500. By position sizing, looks like you were down to about 16,000. The reason is when the drawdowns happened here, our drawdowns were a little bit more substantial because of the position size, but not, blow up your account. Let's try another one. This one's very realistic as well. So Joe starts with 10,000, ends with 11,500. So over 100 trades. This is actually a very realistic curve for most people. They win a few, they lose a few. They win a few, they lose a few. They win a few, they lose a few. And you can see with the position sizing, the roller coaster was a little bit more pronounced. But at the end of the day, so long as you keep winning more and not losing more than you can afford, you'll still come out ahead of the curve. So in this case, you could have made another $3,000 by correctly controlling your risk and using position size. This isn't bad as far as realistic curves go. You can see there weren't any really serious drawdowns. There was a little dip in trading about 35, 40 trades in. But after that, it was fairly successful for the most part. And you can see here too, by using position sizing, your earnings are compounded. But at the same time, again, you don't lose more than you can afford. And you can play with this. You can say, okay, well, what if I'm only right 40% of the time? All right, so you're wrong more often than you are right. You start with 10,000, you finish with just about 12,000. Again, the position sizing is going to exaggerate the swings a little bit more. Joe's drawdown looks like it was maybe $200 or $300. Your drawdown was more to the tune of maybe $1,500 to $1,700. But again, at the end of the day, you hit a few winning trades in a row. The position sizing really, really adds up. And even though you hit a few losing trades in a row, by only containing your risk to a certain percentage of your account, you didn't exaggerate the losses. All right, very important concept. And I think that's probably a good place to finish up today's session. Sorry, folks, I was hoping to be able to show you a little bit more, but the market's just not, they don't have their heart in it today. We will do it again next Wednesday, so I hope you'll stop by. Hopefully there will be a little bit more to show you then. And DTS owners, I will see you in the trading room tomorrow morning. Until then, bye for now.